on Business Incorporated today. Ghana to get $27 million grants from the African Development Bank for mini-grid and solar projects. Nigeria's cocoa exports up 44% for the first 8 months of 2021. And Liberia burns old and mutilated currencies worth $600 million Liberian dollars. You're welcome to another fresh episode of Business Incorporated on Channels Television. I'm Ini John Mekwa, where we'll start as usual with market in Africa, and our major markets that we track were mixed at intraday, starting with Nigerian Stock Exchange. It was down, sustained the negative sentiment yesterday, 0.14%. While South Africa's GSA index was up 0.26%. Elsewhere on the continent, Egypt's EJX 30 fell by 0.63%, while Kenya ended yesterday's session in the positive territory, 0.41%. And further, we'll move to the Middle East, where it's mostly negative for the markets there. Abu Dhabi was down marginally, though, 0.08%. Dubai dropped also more than 0.5%, 0.68%. Still within that region, Saudi Arabia's Tadawul index slipped 0.15%, while the Qatari market was the only gainer at intraday. Let's go to Europe now, and Europe's dependence on Russian gas has long been a topic of heated debate. Now, critics of Russia's energy giant Gazprom suffered a blow as the European Union's second highest court upheld a 2018 decision that let the company settle a long-running antitrust investigation without paying a fine. Well, we have Chris joining us from Berlin now to give us a background and outlook for this case. Hello, Chris. So what's this case all about?
Well, in 2018, the European Commission, which is also the bloc's competition enforcer, accepted Gazprom's concessions, which included a pledge to reform its pricing structure and allowed rivals a foothold in Eastern Europe. Now, that allowed the company to avoid a fine that could be as high as 10% of its global turnover, which, just to let you know, in 2020 was $85 billion. Now, a Polish rival, the Polish government, and some Eastern European countries criticized the settlement for being too soft on Gazprom and challenged it in court, claiming it didn't measure up to hefty EU antitrust fines for U.S. tech giant Google, for example. Now, the Polish PGNiG also asked the court to annul the Commission's rejection of its complaint about Gazprom's allegedly abusive practices. At the heart of both cases is the before-mentioned settlement, ending a year-long row over Gazprom's behavior in Bulgaria, the Czech Republic, Estonia, and other European countries, all dependent on Russian gas. In 2015, the EU executive branch told Gazprom it had charged customers unfair prices, restricted the free flow of gas, and hindered competitors. Now, the two sides eventually, in 2018, agreed a plan to address these concerns. Gazprom had to allow clients to ask for lower prices when its prices diverged from benchmarks such as Western European gas market hubs, scrapping its old system of linking prices to the cost of oil. By doing so, as I said, the company avoided potentially huge fines. Now, the court ruled that the European Commission was within its rights to make that arrangement, even if it did not address completely the concerns of the Polish complainant. However, the court found in a second ruling that the Commission had been wrong to reject PGNiG's own complaint against Gazprom, launched in parallel to the Commission's talks with the firm. This was shut down without due diligence by the EU, according to the judges.
And what possible impact can this ruling have?
Well, the ball is now in the court of the EU Commission. It needs to act. It needs to draw conclusions from the ruling. The Polish plaintiffs say they hope that the Commission will act swiftly on what they continue to see as antitrust violations. In general, there have been accusations of Gazprom hiking prices. Countries like Poland are complaining that the company is delivering only little gas to the EU despite making more revenues. thanks to higher prices. In 2021, gas was about 4 times as expensive as the year before, as oil and gas revenue account for over a third of the Russian budget. The country has been a large beneficiary of the current market developments. Now, Russia's president, Vladimir Putin, and Gazprom both have been rejecting accusations of market manipulation. According to the EU Commission, Gazprom does fulfill all its contractual obligations, but does not deliver more gas, despite there being more demand. The Commission has therefore initiated a probe into possible illegal market dominance, with results still pending. Now, the issue has been a particularly touchy one in Germany as well, as Gazprom has only recently completed its Nord Stream 2 pipeline, which is to deliver Russian gas directly to Germany, bypassing countries like Ukraine, which until recently have been able to collect transit fees for the gas flowing through these pipelines. However, large parts of the now ruling Social Democrats in Germany, including Chancellor Olaf Scholz, have been of the opinion that nevertheless this is not a geopolitical but a purely private business project. This stance now has softened somewhat, with the party head of the Social Democrats claiming that abandoning the ready-to-go project could be part of the catalog of sanctions against Russia in the current standoff with Ukraine.
So let's move away from the Gazprom and energy issues now and look at the markets. How are the markets, and especially, have they started reacting to the ECB decision?
Well, investors on European markets have been starting cautiously into Thursday's trading session. In Frankfurt, the DAX trading about 0.5% lower. Monetary policy is the topic of the day. Record Eurozone inflation will feed a tense debate within the European Central Bank over the course of its monetary policy. The ECB's Governing Council has been meeting this morning, and the minutes of the group's previous meeting show that policymakers are deeply divided over the question whether inflation is a temporary problem, as the ECB's head, Christine Lagarde, has been saying, or whether it is likely to be a longer-lasting issue. Now, an inflation rate of 5.1% in the euro area last month is likely to spice up the discussion.
Well, I guess we still have a whole lot more to talk about when you talk about the monetary policy. Well, thank you so much, Chris, and enjoy the rest of your day. Well, let's move now to the UK and talking about monetary policy decisions. Analysts have predicted that the Bank of England will vote on potential rates while inflation soars to 30-year high. And just before I came into the studio, I think the figures were out, the decision was out, but Juliana has the details of what the MPC decided. Hello, Juliana. So what's the decision?
Good morning, good afternoon. Yeah, a big moment for the UK economy today. You're right, 12 noon UK time. The Bank of England Monetary Policy Committee decided to hike the base rate of interest from 0.25% to 0.5%. This is the second time that interest rates have risen in 7 weeks. It wasn't a unanimous vote. 4 of the 9 strong MPC members actually wanted the interest rate to go up by 0.5%. So we could have seen a rise to 0.75%. I think that really underlines the severity of the cost of living crisis here in the UK right now. The Chancellor Rishi Sunak is dodging some pretty tough, angry questions from Labour opposition members who are not happy with just how much low-income families are going to be squeezed, certainly this year, but perhaps in the years to come. I think one of the most striking takeaways from the Bank of England gathering today is about inflation. Now, it's currently at 5.4% in this country. It's expected now to rise to 7% in the spring, and that's a huge number, especially if you consider that just a couple of hours ago, the Ofgem energy regulator rose the energy price cap by £672. So now bills are going to be just under £2,000 a year. That is a big increase on what it was early last year, where the base rate, the flat rate for bills was £1,000. So there is a lot going on in the economy. Of course, we know we've got domestic Downing Street issues about whether or not the Prime Minister was at a party. But now I think the attention is squarely focused on the cost of living. And of course, it is a huge concern to the Bank of England, which is why they've taken that dramatic decision today.
Yeah, and the market, is it too soon? Have they started reacting to this hike?
Well, they have. Of course, the pound will always do well once interest rates have been risen. But I think the fact that the FTSE is in negative territory is really because of the energy regulators' decision to rise the benchmark by £672, which is an awful lot of money. There are several measures that the Chancellor, Rishi Sunak, is dishing out to the general public now. Of course, we'll have more reacts tomorrow. But currently, the FTSE All-Share is down by 0.24%. The FTSE 100 is also down by 0.17%. And the domestic market is down by 0.54%. In the currencies market, the British pound is currently down on the US dollar by 0.02%, though up on the euro by 0.16%, and also up on the Japanese yen at intraday by 0.34%, Inni.
All right, Juliana, thank you. I know we'll have a lot to talk about. You probably have that discussion about the new energy plan with Ladi tomorrow morning. So we'll settle on that tomorrow. Thank you so much for giving us the update this afternoon.
Thank you.
So let's move on now. Asia-Pacific markets traded mixed today amid some lingering concerns about global growth and ongoing geopolitical tensions. In Australia, the AX 200 trimmed earlier losses to trade down 0.14%, closing at over 7,000. But shares of major miners rose as Rio Tinto advanced 2.43%, and Fortescue was up 3.27%. BHP added 3.09%. Japan's Nikkei 225 fell more than 1% to 27,241.31, while the Topix index was down almost 1% at about 2,000. In South Korea, the Kospi bucked the downward trend and rose 1.67% to almost 3,000, while the Kosdaq advanced 2.15%. Singapore's Straits Times index gained 1.72% in late afternoon trade. A number of major markets, including those on the Chinese mainland and in Hong Kong, are still short for the New Year holiday. We go to the U.S. now, where stock futures fell early today as traders poured through the latest batch of corporate earnings, which include disappointing numbers from tech giant Meta Platforms, that's Facebook. Futures tied to the Nasdaq 100 dropped 2.1%, and S&P 500 futures slid 1.1%. Dow Jones Industrial Average futures slid 97 points. Shares of Facebook parent Meta Platforms plunged more than 21% in after-hours trading after the company's quarterly profit fell short of expectations. The company also issued weaker than expected revenue guidance for the current quarter. Other social media names, including Snap and Twitter, followed Facebook shares lower. Snap slid 16% after the bell, and Twitter dropped more than 8%. The Dow jumped more than 200 points on the day, while the S&P 500 and Nasdaq Composite advanced 0.9% and 0.5%. Those gains were driven by a jump in tech shares, which were led by 7.3% rally in Alphabet shares. In the oil space now, prices eased actually following weak U.S. payrolls data and some profit taking, but remain underpinned by tight supply as OPEC Plus producers stock to planned moderate output increases. Brent crude fell by 17 cents to $89.30 a barrel after rising 31 cents yesterday. U.S. West Texas Intermediate crude was down also 31 cents at $87.95 a barrel. It gained 6 cents yesterday. U.S. private payrolls fell for the first time in a year in January, raising the risk of a sharp decline in employment that would deal a temporary setback to the labor market. Still, tight global supplies and geopolitical tensions in Eastern Europe and the Middle East have boosted oil prices by about 15% so far this year. The past week, crude benchmarks hit their highest prices since October 2014, with U.S. crude rising to as much as $89 on yesterday. Well, still in the oil space, but in Nigeria now, an oil production vessel has exploded off the Nigerian coast. And this happening months after an oil spillage wreaked havoc in the Niger Delta. The vessel, the Trinity Spirit, blew up yesterday. Sheba Exploration and Production Co., which was the vessel on lease, released this statement. And the ship is able to store about 2 million barrels of oil and can process up to 22,000 barrels a day. A wellhead belonging to Aito Eastern Exploration and Production Company blew up on the 5th of November in Bayelsa State. Let's take a break now. When we come back, we have more stories from the African continent. So stay with us. It's Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Now in our commodity space, we talk about a very popular product made from cassava. Some people call it cassava flakes, but it's popularly called gari and is a widely consumed staple in Nigeria. The price of gari has fallen by 27% to 13,500 naira for a 50 kg bag in the last 7 months. On the other hand, the rate of food inflation has accelerated over the past few months to 70.73%. Well, what is the relationship between this to the fall in the price of gari, and yet we see a hike in food inflation? We have Longi Dafour, an analyst with Financial Derivatives Company, to help us understand what's going on. Hello, Longi. Good afternoon.
Good afternoon. Thank you for having me.
Good to have you. So help us to understand that gari is a staple in Nigeria and the price is down, and yet inflation doesn't seem to affect inflation movement.
Right. So the reason for that is typically in Nigeria, how the NBS usually determines the food inflation is based on a basket of specific commodities. Now, gari is indeed part of that basket, but then within that basket, we have various commodities ranked by weight. So what we are essentially seeing is that what it signifies is that the weight that gari has within that basket is lower than other commodities such as rice, onions, and so on. So even though the price of gari is moderating, the prices of other commodities within that basket, like I've already mentioned, rice, onions, and so on, which are actually much higher weighted than gari, are lifting food inflation up, even though we are seeing a moderation in the price of gari.
So we have, gari does have substitute semovita, and we see semovita has had its price also fall within the same period. And this, what does this tell us? Does it indicate that substitute may be moving in disparate direction from the price of gari?
Yeah. So like you rightfully mentioned, semovita is indeed a substitute for gari, along with things such as flour and rice. So the reason why we are seeing this disparity between the price of gari and its substitutes, which breaks the traditional laws of cross-elasticity of demand, is essentially because of our imports. So gari is produced locally from cassava, which is farmed locally in Nigeria. And these substitutes, such as rice and flour and so on, are derived from, or rather, are imported from outside sources. So due to issues that we are currently seeing globally, supply chain issues, general supply constraints, and so on, these are affecting the global prices of these commodities which we are importing in. And these higher prices from imports are translating into the higher prices that we are seeing at the domestic market. So even though the price of gari is moderating, the prices of its substitutes are indeed going up because of issues such as exchange rate pass-through effect and so on that are affecting these imported commodities.
So recently we saw the launch of the rice pyramid in the Federal Capital Territory. We have other programs, special agro-processing zones and investment schemes by the government. Do we see this feeding into the food inflation to at least see a moderation in the near future?
Yeah, so the government does intend for these initiatives, like you rightly said, the rice pyramids, which are expected to boost rice supply domestically and, of course, lower the domestic price of rice. What you would expect, or what we do expect, is that this should indeed have some effect on food inflation and moderate it. But then on the flip side, like I've also mentioned, global prices are high. And because we import a lot of the foodstuffs which we actually use domestically, these high global prices are going to feed into food inflation and should also have, it's going to become sort of a mixed bag. they should also have sort of a weighing down effect and drive up the prices of their food or food inflation and so on that we see domestically in Nigeria. So it's a mixed bag.
All right, so we'll keep our fingers crossed and see that mixed bag and hope that with the rice pyramid, importation of rice would at least reduce, you know. But thank you so much, Longi, for sharing your thoughts with us this afternoon.
Thank you. Thank you.
Let's stay in Nigeria now. Cocoa exports rose by 43.5% in the first 8 months of 2021. From a year earlier, it was 100,779 tons, and demand recovered in the wake of the pandemic. Measures by government to curb the spread of the pandemic also hindered export last year, creating a backlog of unshipped beans, with some stock at the Lagos ports and warehouses across the country. Cocoa exports, which is Nigeria's biggest export after crude oil, stood at 70,202 tons in the 8 months to August 2020, and more than doubled to 142,092 tons in December 2020. We go to Liberia now, where the central bank has publicly burnt a large quantity of withdrawn bank notes in a gesture aimed at winning back public trust after a major controversy. The central bank burnt old and mutilated banknotes worth over 600 million Liberian dollars. That's about $4 million worth of dollars. They were old and mutilated and had been taken out of circulation. Now, according to the central bank, the disposal follows concerns that old currency notes remain in circulation despite the government printing new ones in recent years. It also comes after the apparent disappearance of state funds in 2018, with allegations that more than $100 million worth of newly printed Liberian banknotes had gone missing. In Ghana, the Development Finance Institution of the African Development Bank's concessionally funding arm, the African Development Bank Fund, has approved $27.39 million grant to Ghana for the development of renewable energy investment in the mini-grid and solar photovoltaic net metering space. The project involves the development of 35 mini-grid standalone solar PV systems in 400 schools, 200 units in healthcare centers, and 100 units for community energy services centers. It will also deploy up to 12,000 units of roof-mounted net-metered solar PV systems for public institutions, small and medium-sized enterprises, and selected households. And the European Union will deliver 5 new search and rescue vessels, including 3 ships and 2 boats, to the Liberian Coast Guard during the first half of this year. The European official said that this is the continued effort to support and enhance the capability of Liberian Coast Guard, who rescued more than 31,000 migrants at sea. And just before we go, let's see what's happening in the metals market. We see that gold prices hovered on Thursday below the previous session's 1-week high as the U.S. dollar regained ground ahead of this major central bank meeting as the economists grapple with broadening inflationary risk. Spot gold was down 0.1% to $1,805.58 after rising to $810.86 in the previous session. It's the highest since the 27th of January. U.S. gold futures also fell 0.2%. Markets expect the Bank of England to raise interest rates again and signal further unwinding of its pandemic stimulus later on, while the European Central Bank is said to keep unchanged. In other metals, spot silver eased 0.4% to $22.53 an ounce, while platinum was up 0.1% at $1,034.09, and palladium added 0.3% to $2,377.36 an ounce. That's it on the program today. Thank you so much for being a part of it. I'm Ini John Mekwa.